Hello and welcome to BYJU'S Exam Prep. Welcome to our weekly explained session. As you all know, every Friday at 8 p.m. we go live with a very important current affairs topic and we discuss this topic in complete detail with regard to civil services examination. So today the topic for discussion is Digital Rupee that has been launched by RBI on the 1st of November. So in today's session we shall cover this topic in complete detail. We shall understand the importance of this development. We will understand what is a digital rupee, what's the technology that underlies a digital currency. We'll compare this with cryptocurrencies as well and understand the advantages of having a central bank backed digital currency. But before we start, we have a big announcement. From 6th of November, we shall be launching the All India Prelims Test Series for the 2023 Prelims. This Prelims Test Series shall be held both in English and Hindi medium, and it shall be available both in online and offline format. The first two tests are absolutely free for all the aspirants. So I urge you to register immediately for the free Prelims Test Series, and the link has been provided in the description box below. So with this, let's start with the discussion of today's topic. First, let's understand why digital rupee is in news. What's the context? The term digital rupee has been in news because on the 1st of November, the Reserve Bank of India, which is the Central Bank of India, announced the launch of a pilot project that would introduce and operationalize a central bank digital currency. This is being introduced specifically for the wholesale market, for the wholesale segment. As a pilot project, RBI will test the operational readiness and the efficiency of a digital currency, and then it will be rolled out on a full scale even to the retail segment as well. So this pilot project will be executed by around 9 major banks in the country, including the State Bank of India, ICICI, HDFC and others. The digital currency will be rolled out, as I mentioned, in the wholesale market, specifically in the secondary market, where these banks and financial institutions, they purchase government securities or G-Secs. So this is an experimental initiative being introduced by RBI, following which the digital currency will be rolled out on a full scale for the wholesale segment and as well as for the retail segment. The reason why RBI has taken up this initiative is because in this year's budget, in the Union Budget of 2022-2023, Finance Minister Nirmala Sitharaman announced that RBI shall be bringing out its own digital currency, basically the digital equivalent of the Indian currency, which is the rupee. So following this announcement, the government also clearly mentioned that this digital currency will be based on blockchain technology, which underlies most of our cryptocurrencies and digital currencies, the private crypto and digital currencies. The government has stated that the introduction of an official digital currency, which would be regulated by the RBI, would lead to efficient and cheaper currency management system in the country, and it would also give a boost to digital economy. The government has stated that the objective is to empower India to become a cashless economy as quickly as possible and leverage the benefits of blockchain technology to bring in a digital currency that would bring enormous economic benefits to India. So it's in this context that RBI has taken the step to operationalize a digital currency. So first, let's understand, what do you mean by a digital currency, or what exactly do you mean by a digital rupee? See, this digital currency, which has been introduced by RBI, it shall be issued by the central bank itself, just like the central bank issues currency notes. On similar lines, the RBI itself would be issuing this digital form of rupee. It is as good as your regular currency. It is basically legal tender, or what we call as fiat currency, which is backed by the government and the central bank. The only difference is that it is going to be in digital form. Just like the paper currency that we have, the physical currency that we all use to carry out transactions, just like that, there would be a digital form of this currency which would be backed by our central bank. So generically, it is referred as a central bank digital currency because it is issued, regulated, and operationalized by the central bank itself. So this digital currency would have the same value as that of our physical currency. It would be pegged to the rupee, the official currency of India, and it would enable contactless transactions. It would enable digital transactions, digital payments, which has already found a huge market in India. I'm sure all of us would be using digital payment gateways like UPI or net banking. There are various other platforms like NEFT, RTGS, etc. These are various modes of online transactions which are already available in the banking system. But I'm sure most of you would have noticed that we still have some issues in the current form of online banking. Many transactions, they don't happen in real time. They are not settled in real time. Even if you make a UPI payment using a digital wallet, the transactions are not settled immediately. There is a lag. Other transactions like RTGS, NEFT, which is done using net banking, they take even more time. They take few hours for the actual settlement to happen. So this delay is leading to inefficiency. Also, in the current mode of online banking, the efficiency which is needed is lacking and the whole system is not entirely transparent. So RBI hopes to bring out a digital currency which would be based on the revolutionary blockchain technology that would address many of these problems. It would make online transactions more efficient. It would provide for reduction in the transaction cost as well. So in this session, we need to understand what is blockchain, how does this digital rupee function, and what are the benefits? How do we benefit from a digital currency? Before that, please note down a few important facts, especially for your prelims. The digital rupee which is being introduced will be legal tender. Just like the currency notes issued by RBI, it will be legal tender or fiat currency, which is backed by the government, regulated and issued directly by the central bank. That's a very important fact. Next, this digital currency will have an intrinsic value. It will have an intrinsic value of its own, and the value is nothing but the value of the Indian rupee. So it means that the digital rupee would be exchangeable at banks or at any other transaction points. You can exchange your digital rupee for actual physical currency. So you can go to a bank and convert your digital rupee into physical currency notes. The value would be the same. It would be pegged to the physical rupee, and it will basically be considered as a store of value. The digital rupee will have its own intrinsic value because it is pegged with India's official currency and it is backed by the government and the RBI. It is legal tender in our economy. It will be the fiat currency. So this makes it exchangeable. You can use this for transactions anywhere, wherever these transactions are enabled. You can make use of the digital currency to settle the transactions. So that is an enormous advantage. But some of you might know that India has not been very comfortable with digital currencies, especially cryptocurrencies. Be it the government of India, that is the Ministry of Finance, or even the RBI. Both have consistently taken a stand against cryptocurrencies such as Bitcoins, Ethereum, and the others. I'm sure today's youth would be familiar with cryptocurrencies. At least you would know that cryptocurrencies have gained a lot of popularity, a lot of acceptance, especially in the last 2 to 3 years. Today, the cryptocurrency market has become $1 trillion market. The most popular cryptocurrency, Bitcoin alone, commands a market capitalization of almost $1 trillion. Even though there has been a lot of chaos in the world of cryptocurrencies, it still finds a lot of appeal amongst investors and also amongst many institutions as well. But most governments around the world, many central banks, including the Indian Central Bank, that is RBI, and the Indian government, they have been opposed to cryptocurrencies. Instead of cryptocurrencies, the government and the RBI were backing a digital currency that would be backed by the central bank itself. Both government and RBI took a stand against private cryptocurrencies, and they created a foundation on which an official digital currency could be brought out. The argument of the RBI and the Indian government was that cryptocurrencies are inherently volatile. Private cryptocurrencies like Bitcoin, Ethereum, Ripple and others, they are inherently volatile and poses a threat to our financial system. The RBI and Government of India have argued it could even enable financial crime, money laundering, terror financing, etc. So, in general, there has been official opposition against cryptocurrencies from governments and central banks. So, to capitalize on the popularity of digital currencies and to make use of the advantages that they bring in, governments and central banks, not just in India but around the world, are bringing out their own digital currencies. In order to counter some of the popularity of the private cryptocurrencies, these official digital currencies are being brought out. So this is where you need to understand what exactly is a cryptocurrency and how does a central bank digital currency differ from your private cryptocurrencies. This could potentially be a mains question. Considering the importance of this development, UPSC could ask a mains question asking you to differentiate between private cryptocurrencies and a central bank digital currency. So to be able to answer such a question, you need a solid understanding of the concept of cryptocurrencies and the technology that underlies cryptocurrencies. So over the next few minutes, I would try to give you a simple explanation of what are cryptocurrencies. What's the technology that underlies cryptocurrencies? What do you mean by blockchain? And what's the difference, the primary difference between cryptocurrencies and central bank digital currency? It's a very important topic to discuss. See, in a traditional economy, the currency which is used in the economy, which is the fiat currency, the official legal tender, it is backed by the government and the central bank. In the case of India, it would be the RBI, right? So when you look at your traditional economy and the traditional currency that we all use, the physical and as well as the online transactions that we carry out, the whole currency market or the monetary system is entirely regulated by the central bank. As you know, the central bank is responsible for the country's monetary policy to manage liquidity in the economy. The central bank not only issues the currency but regulates it as well. The government also has a degree of control over the currency. So in a traditional economy, currency is centralized. You have a centralized control over currency. It's not just the government and the central bank, even the banking institutions exercise control over the currency supply and the currency movement and the transactions, of course. So in a traditional economy, the issuing of currency, the transactions, the whole arrangement is centralized. It is regulated by an authority. On the other hand, the concept of cryptocurrency is a radical concept. It's a revolutionary concept. Cryptocurrencies are decentralized. There is no centralized regulating authority. There is no single authority who's issuing a cryptocurrency or a digital currency. There is no one who regulates cryptocurrencies. So this makes cryptocurrency a decentralized and a deregulated currency. But the question is, how is this possible? How can you have a currency system which is entirely decentralized, which is not regulated by any authority, any centralized institution? Now this is where technology comes in. That's why many experts, they have always argued that technology is a great enabler. Technology can create a level playing field. See, in a traditional economy, governments, central banks primarily draw their authority because of their control over the money supply. Now imagine a world, imagine an economy where governments and banks and central banks are not in control of the money supply. This is the concept that cryptocurrencies bring out. By using a revolutionary technology called blockchain, we can create a decentralized, deregulated currency system. The idea was first brought out by the developer of Bitcoin, the first major cryptocurrency in the world, who goes by an anonymous identity known as Satoshi Nakamoto. Till date, the identity of Satoshi Nakamoto is not known. It could be an individual, a group of people, or an institution itself, or could be backed by a government as well. No one knows who created the first model of cryptocurrency, that is Bitcoin. But the one going by the pseudonym, Satoshi Nakamoto, brought out a white paper back in 2008-2009 explaining the concept of cryptocurrencies and the technology that would underlie it, which is blockchain technology. So in the world of cryptocurrency, there is no single institution which is issuing the currency. Currency has to be mined. Of course, this is not physical mining, it's not in a literal sense. There has to be a virtual mining of the currency, which is done by solving complicated mathematical equations and puzzles. Basically, companies or even individuals, they can volunteer to be a part of the crypto network. If they invest in computing capabilities, if they develop the required computing capabilities to crack these complex mathematical equations and puzzles, they will be rewarded with a cryptocurrency. So, a cryptocurrency which is introduced in the market through mining can be further traded through secondary transactions. You have crypto markets, you have digital wallets, crypto apps as well, where you can trade cryptocurrencies. You can treat it as an investment. You can purchase and sell cryptocurrencies. So these transactions which happen, the secondary transactions, they're all authenticated by a very transparent system. Every single transaction of cryptocurrency is authenticated by a very transparent and open system. This is a system which is built on the peer-to-peer model, peer-to-peer network. Basically, those who are part of the crypto network, that includes the crypto miners, who could be individuals or institutions or companies, they form a peer-to-peer nodal network. There are multiple nodes around the world, right? Anybody who can invest in high computational capabilities, because cracking these complex puzzles requires very high computational capabilities. You need advanced processors. You need advanced computers, which also require a lot of cooling solutions to bring down the temperatures as well. So mining cryptocurrency in itself is not cheap, especially because cryptocurrencies have a limit. In order to create a value, there is a cap on the number of cryptocurrencies that can be mined in the case of currencies like Bitcoin. The concept developed by Satoshi Nakamoto was that Bitcoin would have a maximum cap of 21 million Bitcoins. You will not have more than that. Since there is no unlimited supply, it keeps a cap and it helps in preserving the value of the currency. The real value would be determined, of course, by market factors, by the demand-supply equation. But this is one such model that gained popularity over the years, and today it has become a widely accepted model. There are many other crypto digital currencies also which have come up where there is no limit. So even those models have come up, but generally cryptocurrencies have a cap on them, the number of currencies that can be mined, and this helps in preserving the value of the currency. Now compare this with your regular currency issued by the central bank. Whenever the government faces a deficit, or whenever there is a economic crisis or liquidity crunch, governments and banks, the first thing they do is to print currency. There is no limit to what they can print. So during times of crisis, banks and governments print a lot of currency which devalues the currency. It doesn't offset the inflation. The inflation will eat away the value of the currency. So from an investment point of view, the regular currencies we have in the traditional economy doesn't seem attractive. Since governments and banks control the currency and they keep printing currency every now and then, the currency keeps losing its value. And inflation will further eat away the value of your currency as well. So this is where cryptocurrencies are different. Since there is a limit on cryptocurrencies like Bitcoin, and once the market factors are at play, the value would always be protected. It becomes a great investment which can counter the effects of inflation. But however, a cryptocurrency like Bitcoin or any other digital currency does not have its own intrinsic value. Now see, the currency that we all use, be it the dollars, the rupee, they have a certain value. The paper note that we use has a value because the government has given it value. The RBI has backed it. Since it's a fiat currency and the legal tender, it has an intrinsic value attached to it. But these private currencies, they have no intrinsic value. The value is entirely determined by the market factors. So this is one very, very important observation. A cryptocurrency, a private currency, has no intrinsic value. Of course, it's entirely digital, it has no physical form, and its supply is entirely controlled by a centralized authority. The central bank, the government, they all play a role in controlling such a currency. Now, the question is, what is blockchain and how is it related to cryptocurrency? What exactly is blockchain technology and how does it enable transactions? How does it provide so many advantages to a cryptocurrency? See, a blockchain is basically nothing but a digital register. It's a digital ledger. Even in the traditional economy, with regard to our regular fiat currencies, all transactions are recorded in a ledger. You go to a bank, you transfer money to one person, right? The transaction is recorded in a ledger, which is controlled by that bank. So there is a registry, there is a database where the transactions are being recorded. But in a traditional economy, the ledger is not open to all. You can't go and see what transactions are happening with other accounts. You can only view the transactions of your accounts. So the criticism against traditional currency and traditional economic system is that the whole money system is opaque. It is controlled by few institutions. There is no transparency. There is scope for committing economic fraud. Because if the ledger of the banks is manipulated, right, the public in general cannot keep a check on it. It's the authorities who keep a check on it. So the argument is that it's much easier in a traditional currency-based system to pull off massive economic scandals. This cannot happen in the case of cryptocurrencies based on blockchain, because blockchain is basically a digital register, a digital ledger which is open and can be viewed and controlled by the peer-to-peer network. Every single transaction that happens has to be authenticated by the peers who are part of the network. So the cryptocurrency mining firms, who not only mine the currency by solving the complex mathematical equations, they will also play a role in maintaining the digital ledger. Now, just for example, let's say an individual A wants to send money to individual B by using cryptocurrency that is based on blockchain technology. This transaction of A sending cryptocurrency to B, it is logged on one block, on one digital block, and this block is made visible to the entire peer-to-peer network. All those who are managing the network, all the mining firms, the individuals who are part of the crypto network, they can all see this block which has recorded this transaction where A is sending cryptocurrency of certain amount to B. Now every node, every peer will have to certify and authenticate this transaction. Unless and until it is certified by every peer that it is a genuine transaction and it's a valid transaction, the transaction will not go through. So since the validity has been verified through a decentralized model, it becomes a transparent system. In a traditional model, it was a centralized institution, a bank, the central bank, which were recording the transactions and verifying the validity and authenticity of the transaction. But here, there is a decentralized model which has been created where peers around the world are verifying every single transaction. Even for this, they get rewarded with cryptocurrencies. Even for performing this role of verifying the authenticity of the transaction, the peers get rewarded with cryptocurrencies. Again, they have to solve mathematical equations to access the digital ledger where they will certify the transactions which are happening. So this makes it an almost foolproof way of transferring money from one account to another. And this block, which has now been certified as a valid transaction, gets added to the digital ledger. So block after block gets added to the digital ledger, and this is nothing but your blockchain. The blockchain is nothing but a digital ledger which is being verified in real time by peers around the world. So essentially, it provides for a quick transfer of money from one account to another, where the transaction has been verified, the transaction has happened swiftly and through a decentralized model without any involvement of institutions in between. So this will reduce the transaction cost. It will obviously bring down the transaction cost because there are no institutions involved in between. It's a distributed network, a distributed ledger which is maintained by peers around the world. So this model seems like a great model. It seems to have many advantages. But at the same time, the very same model has a lot of drawbacks as well. Cryptocurrencies have many advantages. Once its value reaches a certain point, it becomes a great investment. You can diversify your investment. It can even fetch very good returns if there is enough demand in the market. There are many cryptocurrencies which gained a lot of popularity based on the sound model that they were built on, like Bitcoins, Ethereum, and others. Since the supply of the currency is limited, currencies like Bitcoin, they have a limited supply. It will give you a protection against inflation. The currency will not devalue over time. No one can introduce extra Bitcoins. And over the last few years, it has gained global acceptance. Around the world, individuals and even many big institutions started accepting cryptocurrencies, started investing in it, thereby increasing the demand for cryptocurrencies. So apart from these advantages, parallelly, there are a number of disadvantages. There are a number of risks, very serious risks to the traditional economic model. The biggest risk is the volatility of a cryptocurrency. Cryptocurrencies can be very, very volatile because, as I explained earlier, they have no intrinsic value. A legal tender or a fiat currency has an intrinsic value because it is backed by the central bank, backed by the government. Here, there is no centralized authority backing it. There is no intrinsic value attached to it. The value is determined entirely by demand-supply factors. And since there is no regulation in this market, nobody regulates the market, it can lead to a lot of volatility. The big players, the big fish, they can manipulate the market easily. They can pump the value for the short term and then pull out their investments, thereby putting smaller investors at risk. Is that clear? The big institutions, the big players, they can invest a lot of money initially to artificially drive up the value, even when there is no genuine demand. And as the value starts going up exponentially, a lot of customers, retail investors get attracted. Then the big players will pull out at the right time, thereby making enormous profits, whereas leaving behind all the small investors who will incur massive losses. So it's a very volatile currency. And if you really want to diversify your investments, there are other alternatives, right? You have the stock markets, you have gold, there are various other investments available, not just cryptocurrencies. Cryptocurrencies inherently are risky investments. Many experts argue that cryptocurrencies are inherently risky because of its volatility, and there are cases where cryptocurrencies, their supply has not been limited. The model of some cryptocurrencies is such that there is no limit on their supply. There was also one incident where the Bitcoin network had been hacked and additional Bitcoins had been mined at one point. But this issue was later fixed. The technical issue was fixed. It was protected from any hacking attempts as well, because the currency comes with encryption. It comes with a very high degree of cryptographic encryption. This is another added advantage of your private cryptocurrencies. since the whole network is highly encrypted, it offers a lot of immunity against any hack or any fraud being committed. This is definitely an advantage. But in the cyber world, as you know, there is nothing known as foolproof security. You never know when a technology can be brought down, a working model can be brought down by using new forms of cyber attacks and cyber weapons. There have been instances where digital wallets, crypto trading platforms have been hacked and cryptocurrencies have been stolen. So these incidents, they do highlight the risk associated with cryptocurrencies. And apart from this, the biggest concern for governments and central banks is that they can be misused for a number of illicit and illegal activities. Since there is no centralized authority monitoring the transactions, regulating the whole market, it can be easily misused by criminals. Also, please note, since the whole network is highly encrypted, it provides for very high degree of cryptographic encryption, the users of these currencies can become anonymous. The user could be anonymous. You don't know who the individual is, where they are located from, where they are operating from. So the anonymity that is offered through cryptocurrencies and the volatility attached with it creates the right opportunity for misuse of cryptocurrencies. It can be misused for money laundering. It can be misused for funding organized criminal activities and even to finance terrorism. It can be misused for tax evasion. Even cyber criminals, they rely on transactions through cryptocurrencies. If there is a ransomware attack using a ransomware malware, the cyber criminals expect the ransom to be paid in cryptocurrencies because of its anonymity. So considering these security risks, economic and national security risks, governments and central banks have been strongly opposed to cryptocurrencies. If you look at India, for example, just in the Indian context, right from 2014, since when Bitcoin became slightly more popular, the Indian government and the RBI have consistently taken a stand against cryptocurrencies like Bitcoin. This led to an advisory warning being issued by the government and the central bank in 2018, where the government clarified that cryptocurrencies are not legal tender in the country. It has no official value attached to it. It has no official recognition in the economy. So the government made it very clear that it is not legal tender. It cannot be accepted for transactions. The finance ministry even set up a committee within the government to come out with recommendations to regulate the crypto market, which was gaining popularity between 2014 and 2018. During this period, cryptocurrencies, especially Bitcoin and Ethereum and others, they started gaining a lot of popularity. So considering the market capitalization of these currencies, the government started paying attention to it along with RBI, and a committee was also set up to come out with recommendations to draft a potential law to regulate the crypto market. Then in 2019, as the risk was increasing, as many cryptocurrency related offenses and crimes were happening, the RBI stepped in with an order and placed a ban on all crypto operations in the country. It banned mining, holding and selling and issuing and transferring of cryptocurrencies. So this led to a crash of crypto market in India, but globally its popularity was still surging. So in India it was made an offense to carry out any form of transaction by using cryptocurrencies. The RBI placed a ban on it. But in 2020, the Supreme Court of India stepped in and revoked the ban, calling it as an arbitrary decision. This was right at the start of the pandemic when the global markets had crashed. So as the global economy was falling into a slowdown triggered by the pandemic and the lockdowns, all of a sudden cryptos found a huge appeal in India and around the world. So from 2020 to 2021, for almost 1.5 years, there was an exponential surge in the crypto market around the world. It became a $1 trillion market. Many currencies, they gained a lot of popularity, including a lot of crypto scams, through which a lot of frauds were committed around the world and investors were cheated of their money. Even currencies which had no inherent concept behind it, or currencies which didn't even have a basic value or a demand attached to it, were artificially pushed in the markets. Many currencies like Dogecoin and others gained a lot of popularity, and even though it was gaining more and more acceptance in payments as well in transactions, the risk was also growing exponentially. But over the last few months, the crypto markets have crashed again because the fundamentals were never strong enough. As the global economy has faced a lot of turmoil due to the Russia-Ukraine war and the pandemic, the crypto markets took a hit, especially after interest rates started rising in the United States. Because to deal with the pandemic situation, around the world, governments and central banks had printed a lot of money, introduced a lot of liquidity. So this had led to a temporary surge in the capital markets and in the crypto markets as well. There was free money flowing around. But as governments started pulling back to control inflation, because by end of 2021, inflation had started shooting up. So as the US Federal Reserve started increasing interest rates, there was a flight of global capital from across markets, including developing countries, and this happened even in the crypto world as well. Many investors pulled out and moved towards the US as a safer investment. So this has led to a crash in crypto markets. In the last few weeks, there has been a small recovery. But the underlying point is that cryptocurrencies, private cryptocurrencies, inherently are very volatile. Since they have no intrinsic value and since there are many complex external market factors controlling the price, investors are always at risk. You stand to lose all your wealth which you might have invested in cryptocurrencies. Many trading firms have shut down because they couldn't meet the capital requirements. They couldn't honor the commitments of the depositors. A lot of scams have been reported. Cyber crimes and frauds have been reported linked with cryptocurrencies. So around the world, there is this official pressure against cryptocurrencies, and it's in this context, in India as well, a very big debate began on regulating crypto markets. Because lakhs of people had invested in cryptocurrencies in India. Many startups had come up based on cryptocurrencies and blockchain technology. So the government stepped in. Debate began within the parliament as well. The government started holding consultations with all the stakeholders. And this year, during the union budget, the finance minister announced that India is not going to ban cryptocurrencies. However, cryptocurrencies were recognized and all transactions would be taxed at 30%, flat 30%. They were recognized as virtual assets, investment assets, and any transaction would be charged at flat 30%. Whether you make a profit or a loss, it would be a flat 30% tax. The idea is to keep a high tax barrier so that the government can protect small investors. Because when 30% is the tax cap, when 30% is a flat tax rate, small time investors will stay away from it. The idea was to protect the small investors, and the government, instead of banning it, because the government knows such a digital currency cannot be banned. A decentralized currency like this, which is based on the internet, which is based on the cyberspace, cannot be banned by any government. It will continue to operate in other parts of the world. So the government took a balanced decision to recognize cryptocurrencies and transactions, but it placed a 30% tax to fetch revenue to the government and also to regulate the transactions, to keep a check on the transactions, to monitor them, and also to create a barrier, a high tax barrier, so that small time investors don't enter the market. So this is what happened with cryptocurrencies till this year. Now, in the union budget, the government, along with the RBI, decided to come out with an official digital currency, a central bank digital currency. Because digital currencies, they do have advantages, which we are going to discuss as we are about to end the session. We will discuss the advantages of an official digital currency. So by looking at the advantages, and by looking at the advantages of blockchain technology, the government and the RBI decided to leverage this potential and to introduce an official digital currency. Anyways, India was transitioning towards a cashless economy. Since demonetization, there has been a great push towards pushing India towards a cashless economy. Compared to most economies, major economies, India has made rapid advances in adopting digital transactions, in adopting digital banking. The UPI platform especially has played a very big role in this regard. But to take this further, to push India towards a cashless economy and to bring more efficiency into digital transactions and contactless payments, the government has decided to work with RBI to introduce official digital currency backed by the central bank. Now you might ask, what's the difference between a digital currency backed by the central bank and a regular cryptocurrency? So let me explain this quickly. As I mentioned, a private cryptocurrency, it has no intrinsic value, it is decentralized and deregulated. There's no one controlling it, regulating it. On the other hand, a digital currency backed by the central bank is the exact opposite. A digital currency which is backed by the government and the central bank has intrinsic value. It is as good as official fiat currency. It is legal tender. And of course, it is issued, regulated and controlled by a central authority, that is the central bank. In the case of India, with regard to Digital Rupee, which is being introduced, it will be the RBI which will be the regulatory authority. Such a currency will have a stable rate. Its value will be stable. Its value would be the same as the Indian rupee. Right? It is pegged, it is a complement of the Indian rupee. Whereas cryptocurrency, as we studied, it is volatile. Its value is not fixed. It has no intrinsic value and leads to a lot of volatility in its market. In case of private cryptocurrencies, the transactions were publicly available. As we saw on the blockchain, every peer, every node could see the transactions, every transaction that was happening, and certify it and authenticate it. That is how the transactions were more transparent. At the same time, it breaches privacy of those who are involved in these transactions as well. Even though it provides for anonymity and high-end encryption, the risk of getting your privacy breached was always there, since the digital ledger would be decentralized and publicly available. But here, the digital currency controlled by the central bank would not be publicly open. The transactions will be known only to the sender, the recipient, and the bank that is involved. So this is like the regular ledger available in your traditional currency market. These transactions are known only to the sender, recipient, and the bank itself. Cryptocurrencies were secured through high-end encryption, cryptographic encryption, right? In this case, the central bank will be leveraging the blockchain technology to register the transactions, verify them, but within the banking system. Here, security comes through in the form of passwords. There will be digital applications that will be encouraged by the banks, by the RBI itself, which will facilitate the purchase of digital rupee, transactions using digital rupee. You can store it as a value. So all your digital accounts, your digital wallets, they would be protected by passwords. They would be protected by high-end cybersecurity tools to safeguard these transactions. But the overall transaction model will make use of blockchain-based verification. In the private crypto world, just like every transaction was being authenticated block by different nodes, here as well, RBI and the banks, they will develop a blockchain model where internal verifications will happen. They will create a digital ledger and every transaction will be recorded, and within the banking system, under the supervision of the central bank, the ledger would be recorded, the ledger would be verified, and every transaction would be authenticated. That provides for a degree of transparency in the system compared to the current traditional model, and it allows the authorities to control the market as well, to control the currency and regulate it. So how does it work in the real world? What benefits do we get? Can we customers start using a digital rupee? So let's understand this. As I explained, the central bank digital rupee, it will be based on blockchain technology where the transactions will be recorded on a digital ledger. Only difference is that it is not decentralized. Is that clear? It's not decentralized. It is regulated by the RBI. The RBI, along with the banks, will maintain the ledger. Instead of a peer-to-peer network, a public network maintaining it, it will be a regulated, centralized environment where the RBI and the banks will maintain and update the digital ledger. So this currency will be made available in India in two different formats. There will be one currency for the wholesale segment, that is for the banks, the large financial institutions, non-banking finance companies, etc., and a digital rupee for the retail segment. As of now, the currency which has been rolled out on 1st of November is a pilot project by RBI just for the wholesale segment. The retail currency is yet to come. It might happen soon. RBI said it might happen within a month. This pilot project through which digital rupee is being operationalized, it is specifically meant only for the wholesale segment, and it has been recognized with a symbol e-rupee for wholesale segment. E-rupee W, that is the official symbol which has been assigned to it. So this currency for the wholesale market will help the banks and the large financial institutions to carry out transactions, especially in secondary markets where government bonds, government securities are bought and sold by the banking institutions. It will also help them to settle their payments, interbank payments and interbank settlements can happen more efficiently, because banks would have borrowed from other banking institutions. Banks would have borrowed from the RBI. RBI would have borrowed from the bank. In economics, you would have studied concepts like repo, reverse repo, then call markets, etc., through which liquidity is managed in the banking system. So these settlements will start happening in real time. It will be much more efficient because they'll be using a digital rupee that is based on the blockchain technology. Very soon, a retail digital rupee would also be rolled out, which will be available for all of us, all the customers. It might be rolled out in a phased manner. Initially, a pilot project would be rolled out and then expanded around the country. So this, you can use it as any other regular currency. You can store this currency on a digital wallet, just like you carry out your UPI transactions using various UPI gateways and apps. Similarly, banks will start providing these services, right? Digital wallets will start offering these services where you can store digital rupee and start paying for all your transactions, be it at a shopping mall or be it when you're purchasing something, when you're investing in something. Digital rupee can be used just like you use your regular currency. Is that clear? So it's a complement. It's a complement to the existing physical rupee. It's not going to replace the rupee. The physical currency will always be there. The digital rupee will complement the physical currency and it will try to reduce cash-based transactions. It will push a large part of the economy to the digital domain, thus bringing more efficiency and helping the government and the central bank keep a check and to monitor all the transactions. Now coming to the last part of the discussion, what are the actual advantages of having a digital currency? What are the benefits of a digital rupee which is controlled by the RBI? There are many benefits. The first benefit is that a digital currency cannot be damaged. See, your physical notes, they undergo a lot of wear and tear, correct? After a few months, after a few years, there will be a lot of wear and tear. The physical notes get torn or they might be burned, physically damaged. So thereby, it affects the whole money supply. It affects the value of the currency as well at some point. So a digital currency can never be physically damaged. It's a virtual currency, right? So this will save a lot of cost for the RBI and the government. Because with regard to a physical currency, there's a lot of logistics involved in printing the currency, in distributing it, in transporting it, supplying it around the country. So there are a lot of costs involved, operational costs involved in the case of a physical currency. This can be eliminated in case of a digital currency. It will not suffer any physical damage. It will bring down the cost of issuing a currency and it will bring in more optimization with regard to currency management for the government and the central bank. That's a very big advantage. A digital rupee will have a lifetime of validity. It will never expire, it will never get damaged, right? And also with adequate cybersecurity measures, it will be hack proof as well. Its integrity cannot be compromised. Then a digital currency which is backed by the central bank can transform cross-border money transfers and transactions. Currently, if you go to purchase foreign exchange or foreign currency, right? If you try to procure a foreign currency, be it for purposes of tourism or be it for trade, you will find that the whole process is actually quite cumbersome. You have to fulfill the KYC norms, and the transaction costs, the charges involved, is also quite expensive. So this is a huge cost for importers, exporters, those who are traveling abroad, etc. This can be simplified further with a digital rupee. It will provide for instant settlement, real-time settlement in foreign currency. It will make the whole banking operation system, it will make it more seamless, more efficient. The settlements will happen in real time, and even in foreign currency, the settlements can be done through a digital currency. Your digital rupee can get converted to other foreign digital currencies or even physical cash as well in other currencies. So this will bring enormous advantages in the economy, especially for those who are involved in imports and exports. This is a huge advantage for the government and the security agencies as well. It's a very big advantage for security agencies and all government regulators who keep a check on suspicious transactions. Now, since every transaction using digital rupee will be recorded on the blockchain, of course, these transactions can be made accessible to government agencies, security and intelligence agencies, organizations like Enforcement Directorate, Directorate of Revenue Intelligence, etc. The government can keep a better check on the transactions, be it the IT department, intelligence agencies like IB and RAW, regulators like RBI, SEBI and others. They will get a better control over the transactions which are happening, thereby subjecting almost every digital transaction to government surveillance. This will bring more stability to the system. It will help the government tackle the security threats like money laundering, tax evasion, terror financing. You can almost eliminate the challenge posed by fake currency notes. Hostile countries like Pakistan have been printing fake Indian currency notes and pumping them into the Indian economy to destabilize the Indian currency. That's happening because we have a physical currency. But if India adopts a digital rupee and largely goes cashless, you can almost eliminate the threat posed by fake currency notes, because a digital rupee cannot be faked by an outsider, right? The whole blockchain ecosystem will be tightly controlled by the RBI with enough cybersecurity features. So that is a huge advantage. It allows the government to monitor almost every transaction, keep a check on the money that's coming into India and flowing out of India, keep a check on foreign exchange violations, tackle money laundering, terror financing, etc. And overall, it will reduce the transaction costs. The transaction costs will come down because transaction with the digital rupee will be more efficient, the middlemen involved will be less. It will provide for faster settlements, almost real-time settlements will start happening. This will improve the efficiency of digital payments. It will benefit not just retail consumers, but even the large wholesale players as well. The large companies, banks, institutions, which all carry out very big, high volume transactions, they will stand to benefit. It will make it more efficient, more simpler to settle interbank payments that happen on a regular basis. The settlements between banks and RBI can be settled more quickly, more efficiently in real time, and overall, it will bring about digital inclusion and financial inclusion. Since it will become simpler to carry out these transactions by using a smartphone, it will bring more people onto the banking system. It will make the system more resilient, more efficient, thus driving efficiency in the overall economy. So that's the reason why India is striving towards adopting a digital rupee, and RBI has taken the first step. And India is not alone in this. India is not the first country to do this. Around the world, there are 87 countries which are considering the introduction of a central bank-backed digital currency. According to a report by Atlantic Council, which is a US-based think tank, 87 countries are considering the proposal, and around 9 countries have already introduced a full-scale digital currency. Countries like Bahamas, Nigeria in Africa, and 7 Caribbean nations that are part of the Eastern Caribbean Union, like Dominica, Antigua and Barbuda, St. Lucia, St. Kitts and Nevis, St. Vincent, Grenadines. These Caribbean nations have already rolled out a centrally governed and regulated digital currency. Many of these countries are tax havens. So to keep a check on the transactions, to tackle money laundering and economic offenses, and to derive the advantages of blockchain, they've already introduced a blockchain-based digital currency which is issued by the central bank, regulated by the central bank. Amongst the major economies, China was the first country in the world to launch a pilot project back in 2020 itself. Since 2 years, China has already been dealing with a digital yuan. A digital yuan is already in operation. It's a pilot which is underway. And this year, China will be scaling it up across the country. Within a few months, you will see that the digital yuan will be fully rolled out for wholesale and retail transactions in China. China is way ahead when it comes to other major economies. Countries like US, the European Union through the European Central Bank, then Sweden, even they are considering the idea of launching a pilot digital currency which will be backed by their central banks. They're all studying the proposals. Then Russia has already rolled out a pilot because Russia sees a huge advantage in using blockchain-based digital currencies that is controlled by the central bank and the government. This might allow Russia to bypass the economic sanctions which has been placed on the Russian economy by the Western countries. So Russia is rapidly moving towards introducing a digital currency, a digital ruble of its own. It has already rolled out a pilot project. So now India has also entered the league after a careful evaluation by RBI and other concerned institutions. The first official digital currency of India has been rolled out, the e-rupee, the digital rupee for wholesale segment. Based on the learnings of this pilot, India might be rolling this out into the retail segment as well and scaling it up across the country. So that is why this topic is so important. It's a revolutionary move by the RBI. It might transform the very nature of our economy itself. It does present a number of advantages and it allows RBI to leverage the potential of blockchain technology. So on this note, I would like to conclude my discussion on digital rupee, and I hope it was a beneficial session. So do let me know how the class went in the comments below. Press the like button, share the video with other aspirants, and don't forget to subscribe to our channel. Thanks for watching.